Welcome to Markets Now. I'm Michelle Rook along with Scott Varilek with Kooima Kooima Varilek. Well, we're seeing higher prices in all but the cattle market this morning. And Scott, let's start off with cattle. We've been in correction mode. Do you think we're going to keep correcting? If so, how much?
I wish I had a number on how much. That'd sure be a lot of help for me. But thanks for having me for sure. But a market that was probably due for a little bit of a correction. We've been living on the tight supply for quite some time and have good demand following along with it. So the market still has some really solid footing for when it does want to hold. This correction here is probably going to help us out, I think, a little bit in the long run. Some of these feeder calf prices that we were trying to buy, you're buying break evens at 195. That gets to be tough to swallow, and we're putting a lot of dollars out there for the feeders. So this is just going to give us some opportunity. I think there was a lot of producers sitting on their hands waiting for that opportunity, and this might provide it. Now, on the other side, it's okay, what cattle do I have on feed? If we're all bullish and friendly, suddenly I don't have enough protection on, you better get me into some kind of protection. We're just too high to ignore that and just be wide open, because if we want to break from these levels, there's a lot of room to the downside. But in my opinion, we're going to hold sooner than later. It'd be sure hard looking at that August at 170. We're a good $20 below what we're getting for cash yesterday here in the north. So 168.30 is going to be halfway retracement lower on this last little move August. So I think there's some support here right upon us. We're going to be very tied to the grain market because the feeders are going to be the leaders. Another swift break on the feeders here, gap lower, not trading very well as they're trying to throw some respect to the corn rallies way. A little bit nervous on that side.
So what does all this mean for cash? Packer bids were pretty low to start off with, and obviously with the break in the futures, does that give anybody any leverage because of that big discount that you talked about?
Yeah, the producers still have the leverage if they want to use it. The Packers are still in need of cattle. They're still going to want cattle. I've heard some reports that they're getting some cattle around them and they're okay. Yeah, 126,000 kill yesterday. So apparently there is some numbers around them, but we're very current in the feed yards. We've been dipping into the July cattle hard. I mean, you start throwing around 190. We're going to try to find some more cattle to sell. With feed still being high priced in general, we're going to stay current, keeping the cattle moving. So we're in a good spot to where we could sit on our hands a little bit and try to ask for more yet. The problem comes in the South, where they're more of a basis trader setup. They're going to be more willing to try to take the lower price because it's appealing to them, and there's just a lack of negotiated cash down there. So North feels okay. Worried on where the South is going to buckle here with this down in the board. So, but I alluded to the Packer wanting cattle. I still think they do. The demand is still there. There is some demand bears out there saying these boxes are going to break. Yep, we've got the dog days of summer coming. Consumers pinched a little bit. I don't feel that that's the case. We're still climbing the boxes. They've still proven that they're selling it, and in relative to everything else that we're spending on, you go through a drive-through coffee place and get a cup of juice, whatever kind of name you want to call it, and that's $6. So you're telling me that a dozen eggs for $6 wouldn't be a better fit for your family than that cup of juice for $6, or a pound of ground hamburger or a steak or some good protein source. So I really feel like beef needs to have its spot to where we need some higher prices for beef, because we're still in a little bit of liquidation mode. As we're dry, still seeing some cow herds cashing in, saying this cow price is good. There's not that interest to say, hey, let's start retaining heifers yet. The costs are too high. So I feel like that's what's going to rebound us and get us back to even new highs yet.
Yeah. And to your point, Chase, beef at right around 340. So obviously no slowdown there yet in terms of the demand, but you're hearing a little bit of a trickle in of some cash trade this morning, from what I understand.
Yeah, there's still some of that. Yesterday's confirmation, there was some 189 bids and then some 190, and it's not up and down the road. When you share that kind of news, you get hammered with messages. Who's got it? So that usually tells me that it's not up and down the road kind of trade, but there is some of that out there, some 190 and maybe even higher. No confirmation yet, but if you've got the right kind, the right cattle, with choice boxes at 340, yeah, Packers going to be very interested in some quality cattle. So I like what I hear. I think early in the week they were going to, ask more like 195. I'm willing to give a couple bucks, maybe 192, but I think with the board trading the way it is, 190 would probably catch a lot of cattle.
Gotcha. And we have hogs back higher this morning, just like we did yesterday with cattle lower. How much of this has been cattle hog spread unwinding that's boosted the hog market, and as well the disparity between cattle prices versus hog prices got maybe too wide?
Yep, we had the record wide hogs to cattle, and everybody really wanted to talk about that. The hog producers have really been struggling and need this shot here. And yeah, part of it, cattle hog spreads. When you have a trend that's trending that hard, it brings a lot of funds into the mix, and they can continue to add to that until all of a sudden the trend shifts, and then they have to unwind. So it could be some of that unwinding there. Hogs needed to rally in general, I believe. Right. So I don't know that we've got the oversupply problem really happening like some thought might. So they're going to be able to rebound. I don't know if they're going to be able to get to a dollar and higher. It's certainly possible, but I'm not going to be probably in that camp. They've had their recovery here. I'm expecting a little bit more of a choppy sideways kind of trade. And we need to get into July before we can really put a feather in that hat, see what this crop 12 is really going to do. How's it going to impact us? So there's still a lot of uncertainty and question about that, and that's going to keep it a little bit nervous, I guess.
You bet. But cash and cutout values have both improved quite a bit off of their lows, haven't they?
Yeah, they have. And I had kind of heard that maybe we've got another week of that trend, and then maybe start to look out. So, and that probably lines up with that July 1, what's going to happen. So
yeah, no doubt. Okay, let's move over to the grain trade. Higher prices in the entire grain sector, but corn and soybeans being pushed by the dry forecast. And then the Drought Monitor expanded those dry areas this morning to, I think, about 57% of the corn areas, 51 on beans. So the market is taking note of that, isn't it?
Very much so. The market is interested in how much rain we're getting. We're in a weather market. Here we sit on June 15. And June 15, it was supposed to be cooler, wetter temperatures. El Nino was going to kick in, and typical weather patterns. I guess we're going to push that back. Maybe maybe it's more towards July. So kicking that can down the road as we sit here dry and hot yet. The market's kind of sick of waiting for it. So it gapped higher on Sunday night. Some of those gaps, it's going to measure the D's corn up to 578 after that gap holds. So that would be a target of mine to see, 575, 578. Then we need to see what we're going to do from there. And that would line up perfect with a 3-day weekend that we have coming up.
Yeah.
Also adding to we got an extra day off right during this dry period. There's a little bit of a push to the market probably based on that. So I'm expecting some fireworks for sure on Monday night. It always was July 4th, the July 4 weekend, that 3-day weekend. If you were going to get it to line up there, that would really make the market move. And now we have an extra holiday in here for another 3-day weekend to add to the volatility here. So they want to push it. If we put some rain in the forecast, it's over. But until it shows up, we're going to probably keep trying this upside on.
And December corn back above that 100-day moving average here today. So a close above that would obviously confirm your target, wouldn't it?
Yep, it sure would. So that's just kind of my first spot to look at 578. And then we're going to have to really see what the weather looks like next week if we're going to go through it. So
targets on beans quick?
I don't know if I have a great target on beans. They're taking my breath away a little bit here as quick as they're running. So they're just going to follow with the trio, the corn, the wheat, the beans. I think they're all going to kind of be together. So
you bet. All right. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.